But and I thank you for joining us. It's an interesting time that we talk about this because I have been watching Mthuli Ncube's pronouncements on Twitter, also in the Herald, and I've got a picture that's been forming in my head. I also, of course, have my people on the ground, not as good as your researchers, but they have also given me a picture. So let's begin with your picture of Zimbabwe's economy 2021 and beyond.
Okay, so when we look at 2021, I think it's very important then to analyze the macroeconomic impact of the COVID-19 pandemic. I think one thing that we see that has actually played out within the broader economies really around the loss of productivity in key sectors. And we've also seen worrisome trends where poverty levels are actually increasing. And also we're seeing the rate of unemployment actually increasing. So you find that from an aggregate demand perspective, the risk now is to say that disposable incomes are under strain. So basically, the lack of demand is a major risk in 2021.
Yeah.
But however, it's also worth looking at the low base effects because, of course, 2019 and 2020, we saw it was a recession. So basically, there's an expectation of a rebound. But the question is whether it's going to be V-shaped or L-shaped. We think it's going to be L-shaped in the sense that we're projecting a growth rate of about 3.1%, whereas the Minister of Finance has put it at around 7.4%.
You're factoring in inflation?
Yes, so inflation is, a major factor given, of course, exchange rate developments. So over the past 4 months or so, you find that, there was a bit of stability given that the RBZ had moved to an auction system where the official rate has been around 83 thereabout.
Yeah.
However, developments on the parallel market actually show that there's still a gap between the official and the parallel market rate, which is around 120.
Right.
So as the economy then starts to open up, especially post-COVID-19, and we see a lot of economic activities starting to kick in.
Yeah.
The risk now is that, there's going to be demand for foreign currency, and that will actually push parallel market rates. So we are forecasting rates to move from 120 to about 150 end of Q1, and then 200 in the second half of the year. Yeah. In terms of inflation, we still expect it to be in the triple digits. We're expecting it around 350%. That's the average for 2021.
I want us to pick as much as we can into this interview. We've got another 3 minutes or so left of the show. So give me your 2021 economic growth projection, and then I also want to know which sectors are you looking at as potentially recovering faster than expected.
Okay, so the projection is 3.1%. We think that is going to be gradual in terms of the recovery, and then it will move to 5% in 2022. And then in terms of the sectors, I think there are opportunities within the broader economy where investors can actually take positions. We've noted the agricultural sector, that's one, mining sector, and also the financial services. In the agricultural sector, we feel that this year the agricultural season would actually improve on the back of the rainfall patterns and things like that. But also the issues around food demand within sub-Saharan Africa will sort of push agricultural plays in a good position. The likes of Seedco International, Hippo Valley, and even some of the exporters such as Ariston. So we think that is a sector that's actually exciting for 2021. And then within the mining sector, yes, we're seeing that Zimbabwe is a hard sell, especially on the global mining investment matrix. But we see interesting themes in rare earth minerals and things such as lithium, and also the stories around electric vehicles. So we think that in terms of metals, we expect nickel, lithium, and cobalt to actually benefit from that. So BNC is definitely one to consider this year. Yeah. And also on the gold side, I think the gold price is actually favorable for gold producers in Zimbabwe. We're looking at prices of 1,800. So we like Padenga Holdings and Rio Zim. So those are sort of the top picks in the mining sector. And then in the financial services sectors, we think that there's going to be a lot of M&A activity. We've seen that NASA, the National Social Security Authority, has actually been pushing through a reorganization strategy where it has moved out of ZB Financial Holdings and it increased its stake in CBZ Holdings. So we're seeing that in terms of ratings on CBZ, it has actually moved to around 7 times in terms of forward PE ratios. So we think that other financials should actually re-rate. So we think that there's an opportunity to buy into the likes of NMB.
Quickly, Batanai, for sure. Sorry, I'm sorry to butt in, but we've got a minute left of the show. I want you in that minute to tell me. The other day I saw a tweet and I also saw a story. Finance Minister Mthuli Ncube saying Zimbabwe has turned the corner, suggesting that yes, these other problems will linger, but in terms of the overall macroeconomic environment and picture, things are going to get better from here on. Do you agree?
Partially, I'll say in certain aspects, if you're looking at things such as stabilization around the exchange rate from where we were, I think there's been some progress. But also in terms of issues around privatization, I think there are a lot of wins around that space.
Sure.
But overall, I think there are also risks at the same time.